Hey, welcome back to Two Stupid Guys Trade Stocks. I am Dylan.
And I'm Vinny, and today we're going to talk about at what price do I think, in my stupid guy opinion, Warren Buffett, one of the greatest investors of all time, might buy Tesla stock. With the recent decimation, is it getting into value territory?
Oh man, that's wild.
Two stupid guys trade stocks.
All
Today
right.
that Buffett buys Tesla, that's gonna be oof.
Yeah. So, this is kind of the guiding principle here. This is what we're going to break down from Buffett's philosophy. And then in the later on portions of the video, I'm going to get into the numbers a little bit about what I think Tesla can achieve in terms of vehicle sales and then revenue. And then finally, what the valuation of the company would be. So this is a famous Buffett quote. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And I'm going to make the argument that Tesla is a wonderful company. All right. We're going to go into kind of what sort of, decimation there has been with Tesla stock, right? It's been like complete, utter decimation of Tesla shareholders, right?
Yeah,
No, absolutely no joke there. And it's gotten even worse. Like I started the presentation a little while ago and, Tesla stock has continued to sell off since then. All right. But you got to remember, over the last 5 years, still up significantly, right? So those early investors in Tesla still profited really well because they were early to kind of the revolution, and they had foresight to believe in that Tesla would become eventually profitable and grow and become the actual first American automaker in what, like 100 years to actually become profitable, right? That is a pretty hell of an achievement, isn't it?
it is. When did you start this?
2 weeks ago, maybe. So this has taken a lot of
Yeah,
time and
they
effort and
lost
research
another
to
20
get the numbers.
bucks.
I know, exactly. That comes up. I use the current market cap later on in the video. So, when you're trying to like invest like Warren Buffett, these are some quotes that kind of encompass his philosophy about what sort of companies he wants to invest in, right? So we have a few points here: market price significantly below estimated intrinsic value, margin of safety. That's like literally the last thing we're going to talk about. But now we have above average consistent return on equity. All right, low debt to equity ratio, consistently high profitability, strong and sustainable competitive advantage, honest and competent management, and within his circle of competence. All right. So we're going to take each of these point by point and talk about, whether or not Tesla fits these investing points. All right. So, when we're talking about the return on equity here, if you actually look at Tesla's return on equity, it is actually 35% as of the most recent thing, which is very, very impressive, right? In general, long-term businesses tend to kind of mirror this in terms of stock return, because this is showing you that you have a company that is actually investing money, appropriately, right?
Right. And just for people who have not watched our channel, this is your first time, we have never at any point been bullish on Tesla. So this is kind of
Mhm.
super interesting because Vinny, he's invested in Intel, right? Enough said. Like,
Yes. Yeah.
okay.
I am the value trap king over here. Okay. I'm fine with that. Um, so that gives us point two, right? We know that Tesla is a company that has above average return on equity. They're rock solid company as far as that goes, doing very
Absolutely.
well. All
100%.
right. Now we're going to go to point three. Look at the debt to equity ratio. All right. This is from their most recent balance sheet. So you're talking about a debt to equity ratio of 0.83. Anything under two is considered good. So
Yeah.
they're even better than average there, right? Like
No,
that's
they're
pretty
they're doing
solid.
solid. That's pretty actually kind of surprising. I did not know that.
Yeah. So that gives us point three, right? So we have two lightning bolts so far. I don't know why I picked that. I just kind of thought it was funny. Um, Now we're going to talk about the point number four of his kind of checklist there, if you will, is consistent and high profitability. So this is from Macro Trends. This is Tesla's profitability. Would you say that's consistent and high profitability?
So yeah, I would, but I think things may be changing in the next year from all the crap that happened in 2020. So I agree with you. Yes. Do I think that's going to keep doing this? I don't think so. Especially with the news that just came out with their car deliveries.
Yep, valid point. Okay, we're gonna get into that sort of stuff a little bit later on in this video, but I just want to set up a baseline of that fact that Tesla really has some fantastic business attributes that would put it in a Warren Buffett interested kind of company realm, if you will. All
In
right.
terms of your question, yes, they would. In this thing, yes, they would establish that.
Yeah, exactly. So 3 lightning bolts, right? All right. Now, this one's a question. Number 5 here. Strong and sustainable competitive advantage. There are multiple schools that can come down on this, and we can kind of debate this one, even if you will. Tesla has opened up their patents to other, kind of competitors, so that right there decreases their competitive advantage. However, this is a company that was unknown, not that long ago. Now it's a household name. Like, find someone in America that doesn't know what Tesla is, right? Or who Elon Musk is, right? So it does have a advantage in that case. And then also, if you think about it from the standpoint of their what do you call it, full self-driving, right? They have so many vehicles out there with that technology enabled that they're gathering so much data that does give them credence to having some sort of moat. All right. But it's hard to assign this. Okay. So what I did is I looked at Morningstar. Morningstar's moat, kind of economic moat assessment for Tesla stock is narrow. So they have a moat, but it's not extremely large.
Yeah, because
All right.
doesn't Google have like not as much, but a significant amount of self-driving data?
So in comparison, if you look at miles per driven, it's not even close. Like Tesla is by far and away the king as far as miles of actual full
I thought it
self-driving
was like
data.
miles in a row or something.
So that's miles without a disconnect. That's where Google's Waymo
Got
unit
it.
shines. That it's much better at not having it to freak out and kick you out of the full self-driving mode. But in terms of raw data, Tesla is
For sure.
the leader.
And I mean, even if you're going farther than that, I will say I am not a Tesla dude. I think they're too expensive. But I will say I think because of Tesla, it advanced cars significantly over like a 6 year period because nothing happened for like 30 years. It was the same technology, right? Tesla
No.
came and now all these cars have to increase their competitive advantage. Like, I don't know if you just saw the Ram truck that's supposed to
Hmm.
be coming. Yeah, it's absurd. At no point has Ram ever put anything out like that.
Yeah, like that's why I'm trying to do this video. Is that there are aspects of Tesla that are phenomenal. And there are aspects of Tesla that go, not so much. Okay, so
Yeah.
that's what I want to do. I wanted to give it a balanced kind of overview. That's what I'm trying to do here. Okay, um, so I gave it the gray little stop sign here, or no sign, because like it's somewhere in between. It's got a little bit of a moat, but not exactly enough that Morningstar would consider it to be a wide moat. That part's definitely debatable. All right. Point number 6, honest and competent management. So this is tough. To call Elon honest, I think would be a stretch. But to call him competent, I would still definitely call him competent, right? He's a little bit too overly optimistic to be considered honest in my personal kind of purview. I don't know what you think about
I'm
that.
very excited to see if you give him a lightning bolt or a stop sign because we have had this conversation over text 6 times in the last year.
Yeah.
I think he's incredibly competent. I think it's ridiculous to say that you like made PayPal, sold it, got a bunch of money, you didn't make Tesla. Tesla's already a company, and then brought it to where it is. I'm sorry, that's incredible.
Yeah. No,
What are you
I
giving them?
completely. But like there are little things that like I don't kind of make me get the nice warm feeling as far as honesty. Like, did you notice in the most recent delivery numbers that there wasn't any Tesla semis in there? They completely left that off.
Right, but he's kind of like he's kind of like Michael Burry in that way, right? Michael Burry, when he says something's going to happen, he's 3 years early. So you could probably just wait 2 years and then invest in what he was doing. He's done that countless times. Housing crisis, Oxy, what is that? GameStop. He's done it so many times.
Yeah.
Yeah,
Okay.
does Tesla overpromise? Yes, but it might still happen.
Okay. Yeah. And then point 7 is within the circle of competence. Warren Buffett has definitely owned GM before in the past, so owning an automobile manufacturer is not entirely outside of a circle of competence, right? So I actually kind of deferred on these number 6 here. Number 7, I would give it to him. I don't think I did the lightning bolt though.
So wait,
But I
the
wanted
lightning bolt then.
so lightning bolt for number 7. For number 6, I would go still with the gray stop sign. I would say maybe. Okay.
You're a wizard, Harry.
I
Lightning bolt.
know, but that's still pretty solid. It gives you 4 check boxes, 2 middle of the road, and 1 that we're going to address here in a second. In terms of kind of factors that we have here that are bullish for Tesla, right? Consider Elon Musk a bullish factor, right? You can consider the rising tide of EV adoption. Consider the tax incentives that are launching now.
Mm-hmm.
And they have had consistently high margins.
Yes, I have.
Right? We're going to talk about margins again here in a minute. Now, these are some of the bearish factors. You can also consider Elon Musk a bearish factor, right? Especially now that he owns Twitter and he's become very public as far as like his politics, and people that align with Tesla don't necessarily align with the politics that Elon Musk spouts about on Twitter. So that could be a bearish factor. All right.
Okay.
The competition, right? You talked about the Ram truck.
Yeah.
Everyone and their mother is coming to market with an EV competitor,
Everybody.
but they have first mover action. They have all the AI data from their full self driving, so they do still have an advantage. Okay, but the competition is definitely increasing. The TAM. This is the big question. What is the total addressable market for Tesla? That's one of the things we're going to spend a little bit of time here in a minute. And then the macro environment, right? 2023, not really so sure how this is shaping up. Interest rates are pretty high. World's a very uncertain place. We actually have the most inverted yield curve right now that we've had in over 40 years.
Yeah. No, but could that be the time to buy Tesla? Which is what I think you're doing.
Maybe. So I wanted to try to address the total addressable market here. Okay. So we're looking at the number of vehicles sold worldwide. This is the forecast of 2023. I have another one that's going to take us out a little bit further. But we're looking at about 70 million cars per year, right? Tesla sold 1.3 million cars in the most recent year, now that we just finished 2022. Right? So according to a fair amount of it, this is, in general, the new technology adoption curve. Right? So it's an S-shaped curve that kind of, helps you show, kind of low growth at the beginning and then increasing rapidly a growth and then finally like a little taper off in that laggard stage. Right? This is what most technology tends to follow in terms of its engagement by society, if you will.
Right. Okay.
All right. All right. So now we're going to look at, this is from Tesla's most recent quarterly financials. Just to get an idea of where they are.
Okay.
All right. So we have the gross margin, 30%. It's kind of trending down a little bit in terms of the vehicles, and it's going to probably get a little bit worse now that they're having to do price cuts, right? So that's going to take a little bit of a hit. Fortunately, Tesla had achieved some sort of scale to the point where they were able to actually increase their operating margin a little bit here. They had one bad quarter, but overall, I would say the broad trend has been up for their operating margin.
Right.
That's achievement with scale, right? And then if we actually come down here and look at the cash flow, they have to reinvest a couple $1 billion a quarter, which is a chunk of cash, but it's nothing like super crazy for a company of their size that's still actually growing and expanding, right?
Yeah.
That's kind of what I wanted to highlight from this particular thing.
Give us a like and subscribe for Vinny doing all this stuff. Very out of character for him, to be honest.
Yeah, this is hours and hours of work for sure. So, all right, we're going to talk about the average sale price, right? This is what you said before. Tesla's expensive, right? So it's from the most recent data that we have available. This was the average sale price for a Tesla vehicle, about $54,000, right? And in order to kind of achieve a larger portion of the total addressable market, they have to bring down their cost. Right?
Right.
And when you look at kind of where they operate in the market here, looking at this kind of luxury segment here is kind of what I picked out. And I wanted to see what exactly the volume was as far as like luxury cars, right? Because this isn't quite luxury cars. If you look at the average selling price of luxury cars, it's like $80,000. So they're a little lower than that, but they're not, in the normal range where the average selling price globally of a car is about $30,000.
Right.
So they're still significantly above that. They're somewhere between.
It depends on your timeline too, because when the Model 3 was marketed, it was like 32K, right? So it's all relative.
Same. Ford has increased the price of the base model Lightning F-150 like 3 times, I think, already since it launched in the last year.
It's absurd.
Yeah. But, all right, so the average selling price here, we're talking about $28,000 globally, all cars, for 2021.
Okay.
So most recent year. Yeah. That's quite a far way off from where they are right now. And I wanted to estimate how much of the market is available to them in their kind of current sale price territory. All right. So I couldn't find a good breakdown of this that was any more recent. 2016 was the last year I could find data from. This is from the Department of Energy. And what I did is I inflation adjusted back and tried to find out which portion of the market was in the same territory as Tesla at that time. All right. So you're talking about, it was a 19% inflation reduction back. So it was about $44,000 sale price. So these are all vehicle sales that happened in 2016 that would be in the realm of what Tesla could be selling to.
Stay in math, folks. We finally used something from math class.
I know, right? But you see how much of the distribution curve is below this red box?
The vast majority.
Yeah. So I did the math here, and it represents about 8.6% of the total market, and that's for the U.S., right?
Okay.
I'm going to take a bit of a leap here, if you will, and actually extrapolate that out more globally. If you look at the U.S. market share for Tesla right here, they already had 4% of the U.S. market share for auto sales last year.
Okay. I
Interesting,
mean,
right?
that's pretty high, to be honest, because the total available market's 8%, and there's a lot of competitors in that 8%. Like there's
So
like
this is
every electric, Rivian, all those companies.
Yeah, this is all at best guess, like estimations, all right? But
Okay.
if you think in 4% is what they achieved last year, and 8.6% is their total achievable within this market, which is, when you look at sales price globally, US is above average, right? So this is one of the stronger markets as far as that goes. So interesting, right?
Yes.
Kind of when you go harken back to that S-shaped curve, it starts to tell you like, oh, like we're not right in the beginning, are we? We're probably somewhere along the middle of the S-shaped curve, right?
Yeah, probably.
Yeah,
That's
which
fair.
makes sense. So now we're going to project out. All right. Cathy Wood in her Tesla stock prediction used 2026. So that's what I picked to use here. I'm going to compare that. Right.
Oh boy.
So in terms of total vehicles being sold in the year 2026, I looked it up. It was about 100 million units is what they're predicting. Right? And I'm going to give Tesla the 8% market share globally, which is a bit of a reach, but understand. Um, so this is actually Cathy Wood's market valuation here. Okay, so
Okay.
her bear example was 10 million vehicles by 2026. They achieved 1.3 million this year. I'm going to give them 8%, which is about 8 million vehicles. All right, so
As
lower than
your
her
bull,
bear.
right?
As this is my bull. I didn't break down into ultimate, but it is a bullish case scenario. Okay. Um, I also looked at kind of the margins for other companies that have features of Tesla. So I looked at Apple for their gross margin, 40. It was always under 40% until they launched the services industry or services segment. But that is a premium product, which I think Tesla is and will continue to be. Also looked at Mercedes for their EBITDA margin, which is what she's using here. So EBITDA margin is Charlie Munger kind of terms bullshit cash flow, right? That's what you're using to approximate. So Mercedes, a premium brand that's selling vehicles that are even higher priced than Tesla, manages a 25% EBITDA margin. Right? She is calling for them to actually have a 46% EBITDA margin. Okay. And she's also calling for this average selling price to come down to $40,000. It's under $40,000. So I kept it at 50, meaning
She's insane. She's a
yeah,
literal insane person. How are people still giving her money for her art fund?
don't know. I don't know. Um, but people do it. So,
Oh my god.
I kept it, I said $50,000 average sell price, right? So this is what we're looking at. We're looking at 2026. This is a bullish scenario, I still think. 8 million light vehicles. So I'm having them 8x almost. Well, not quite, but over the next 4 years, which is aggressive. It's a 50% CAGR.
That's
Elon Musk has said he thinks they can maintain a 50% CAGR. Aggressive, okay?
it is
But
extremely aggressive.
it is. It is. You're gonna see here, though. Okay. Average sell price 50K. All right, so I had to come down, which would give them about $400 billion in revenue by 2026, which is about what Walmart I think achieves. Walmart's I think about $100 billion a quarter. Okay.
Okay.
So like this is where the numbers get good. That would give them an $88 billion EBITDA. Now that's that 25% margin or 22% margin. I did a little bit less than they've done over at Mercedes, but about in line with what Tesla has done historically in the low 20s for EBITDA margin.
Okay.
I looked at EBITDA multiples from other car manufacturers. I mean, granted, none of them are growing at the pace Tesla is, but you see the kind of general trend here. Most of these are relatively low single digits, right? Except for Ferrari.
Yeah. Classic.
And I'm going to be a little generous here, and I'm going to give them an EBITDA multiple that's towards the higher end of the range. All right, I think be the third highest basically after Ferrari and Toyota. So I give them an EBITDA margin of 6. That gives them an enterprise
Okay.
value of $528 billion in 2026.
Okay.
I'm giving no credit to any sort of robo taxi network or the robot or any of that sort of stuff because though I can't invest based upon that, and Warren Buffett wouldn't invest based upon that, right? And
So you're
you have
getting rid of all of the rumors, buying the rumors of all the crazy stuff, right? So
yes,
are you also getting rid of the insurance side?
yeah. I honestly, not getting involved in that, honestly.
Got it.
It's not enough that would move the needle for me. They are an auto manufacturer. If I'm predicting $400 billion in automotive revenue, like what scale would they have to achieve with this insurance business in order to actually move the needle on a
I
$400
think
billion
Cathy
business?
Woods thinks there's, I don't know, hers is crazy.
Yeah, that's a separate thing. But so the other thing you have to account for is Tesla has been a share issuance machine. That's how Elon Musk got rich, right? Like by getting tons and tons of shares from Tesla, and he pays like other people at Tesla with share-based comp, right? They're a tech company in that manner. You don't see GM doing that, right? So their average has been 3% per year in share issuance, meaning the current number of shares would go to about 389 billion. I think it's 357 billion, 3.57 billion. Sorry, as of right now, it would be up
That's
to
a lot.
3.89 billion in 2026. Right?
That's a lot.
So it is a lot of issuance, right? So $528 billion enterprise value. They have no debt, so basically that's market cap at this point, because enterprise value is debt plus market cap, right? So divide that out, it gives you about $135 price target for Tesla in 2026.
Okay. All
Yeah.
right. But
So
that's with a lot of things going right.
yes, that is with a lot of things going right. Now, my man Warren Buffett, right, when he talked about point number one back in the beginning, he talked about margin of safety, right? His typical ideal or hope for margin of safety is 50%. He has bought companies like Bank of America at 30% margin of safety. But if you believe this bullish scenario, which is aggressive, you're talking about them selling 8% of the cars in the world in 4 years, 57% CAGR, and all the other businesses going, to nothing, basically, not actually amounting to much. You're still talking about, if you discount this back at a 15% rate, $77 share value today.
I think that will happen in the next 5 months.
It's reasonable. And then if you look at a 30% margin of safety, which is a narrow margin of safety for a company like this, $54 a share. And even more aggressive for Warren Buffett's, 50% margin of safety, you're talking about $38.80 a share based upon this bullish projection.
So let me ask you a question. At what margin of safety would you, Vinny, buy Tesla shares?
I would need at least this 38.80. That'd be my minimum.
So
I would
Tesla
not
goes
even.
down to 50, and you're like, nah, I don't want to even risk it.
Nope. Because like I said, that is still bullish in terms of their actual vehicle sales, I think. Yeah, like I said, I gave them a full 8% of the global market
I
in
don't
4
think they
years.
hit 38. I think the lowest they go is 50.
I mean, that's more based on technical analysis, I think, and stuff like that. But from a valuation standpoint, I don't think this is entirely unreasonable, to be honest with you.
Okay. Well, I mean, we still have yet to have a capitulation event, right? So if we do Tesla in terms of day trading, which I dabble in, it's almost to the point where you don't even have to know the chart. You can just short Tesla for like the last 3 weeks, and you're probably going to be right, right?
Yeah.
Because it's like a decent price on the day. So if that keeps up, things always overcorrect. They never go down to where they should. So even if they probably shouldn't be below 50, they could overcorrect to 20, when the whole market goes crazy or something, if it happens. So, I mean, I guess it's possible.
So basically, my lesson or my summary of this entire my hours and hours of looking at data here is that I want to own Tesla, but it needs to fall much further before it's in my wheelhouse of buying it.
Okay. All right. I can't believe you just said that you'd buy Tesla, to be honest. So, I'm happy.
Yep.
All right, guys. Give us like a like and subscribe. That was a hell of a lot of work for Vinny. This is a longer video than we usually do, but that was pretty interesting. So,
Yep. See you guys in the next one.